Hi all, dear listeners. Welcome to this new episode of my podcast, A Digital Tomorrow. Today I'm honored to be joined by Miguel Ángel Fernández Ordóñez, former governor of the Bank of Spain, which, as you know, is Spain's central bank. Welcome, Miguel Ángel.
Thank you, Ariel. It's a pleasure to be with you.
The pleasure and honor is absolutely mine. And even though I think that everyone will already know you, I leave it to you to introduce yourself to my audience.
Well, it's my last job, and now I am retired. My last job was governor of the Bank of España, as you said, and my professional career has been the career of the boring career of a civil servant. I mean, but it's true that I've been in many jobs in the public Spanish public administration. I've been Secretary of State of all the secretaries, the state secretaries of the Minister of Finance, Trade, Economy, Finance, Taxes, and so on. And I've been also president or chairman of some independent agencies like the Antitrust Court, that in Spain was a special Federal Trade Commission, but well, more a court, no, a tribunal, Tribunal de Defensa de Competencia, and I also was president of the Energy Commission, and my last post was governor of Banco, that is special, independent or autonomous, and then my career has been devoted to liberalize the Spanish economy. I started with the government of Felipe González, that was a social democrat, but it's curious that privatized 75 companies and we liberalize commercial outlets, the rents and so on, many things, and it was a very interesting thing. And all my life has been advising to introduce free market in Spain. And really, Spain now has, I think, a very good comparing with other countries, free market rules, but not 40 years ago. Well, that's summing up.
Well, thanks for the introduction. And as I said before, it's an honor because, as most of my listeners know, I'm always interviewing people from central banks. I'm very interested in central bank digital currencies and central banks in general. So having you here is, as I said before, a huge honor. I'm going to ask you later about your experience as governor of the Bank of Spain, because I know that you had a rough job, a difficult job, leading the Bank of Spain during the 2008 financial crisis. But I think that before that, I would like to start talking about CBDCs, because after you retired from the Bank of Spain, you kind of became an advocate of central bank digital currencies. You've been very involved in many conferences talking about this topic. So I wanted to ask you, like, why CBDCs? Why do you think that they matter? Why do you think they are or will be important?
Okay, I will give you my view. That is a little different of the answer that could give you many other people, because I think that why CBDC, the answer is because authorities and central bankers were very afraid or very had fear about the Libra and the stable coin, and then they reacted proposing. But I am thinking in CBDC, or what was called before, I mean 10 years ago, was called sovereign money, digital sovereign money. And why? The same at the end, because I think the only way, I see the current monetary and banking system have many problems of lack of competition, and free market do not work, the free market discipline do not work. Is a sector, is probably the most protected and intervened sector of all the economies. Once China and other communist countries join free market, I think that the pending liberalization reform is the payments and credit liberalization, the banking activities. No, Why CBDC? Because I think that the only possibility to have competition in banking services is to have a stable money, a money that do not have problem of instability. And that's why my idea of why we have not now enough competition is due to problem of stability. I would say that the deposits now are the digital currency that we use, but it's a digital currency that have many problems. The main problem is because it's not money. I mean, the euros, the physical euros, talking about the euros, but we could talk about any other currency, no? Are money. I mean, 50 euros are 50 euros, but a deposit of 50 euros is not money. It's a promise to pay you 50 euros. What does it mean? What does it mean? It means that it's not a safe asset, it's an unsafe asset, it's a risky asset, a financial asset that have the risk not to return your money. That is the problem. And it's a risky asset, and then it has the problem of conversion in money. For instance, solvency problems, because the bank have invested that money and the investments have failed, and they cannot return your money, solvency. The physical note of 50 euros do not have that problem because the money has not been invested. It's money. It's just you have. But other problem that have the banks, more important even than credit risk, is the liquidity risk. What is the liquidity risk? Is the risk of not have the possibility to convert in money the investment you have rapidly, immediately to the demand. And then they have that problem, but the physical euro do not have that problem, because if you have as mean of payment money, the currency, you don't need to convert in money. It's money. Then the physical euro. Then my idea is that we should have what we got in the physical world of money, have in the digital world. Then, and that's why I think the CBDC is important, because CBDC could be what is now the physical euro in digital, has been used by the central bank, and then is a safe asset. Of course, it will have the problems of monetary policy, inflation and deflation, but all currencies have that problem. But from the point of view of the stability, the lack of fragility that have the deposit, you had a stable. And then, and I finish, then why? Is because the deposits have those problems, and then during 1.5 centuries, because this started in the 19th century, the state has been trying to avoid the problem of having an unsafe asset, introducing remedies, introducing interventions. Mm-hmm. The most important is the lender of last resort. Then it was invented in the 19th century that the state, through central banks, lent to the banks to avoid the problems of liquidity. Well, that is an enormous privilege. It's fantastic. Many enterprises in the world would like, I have liquidity problem, please give me a loan, the state, and so on and so on. As is normal, we consider that that is natural, but it's not natural. It's necessary, but it's not natural. It's necessary because you have an unsafe asset that is a deposit. Or the taxpayers, well, they bailing the banks, no? Why? Because if you don't bail out the banks during that crisis, I had a quarrel with my minister that was Indus, because he said that we should not help banks and we should not bail out banks. Well, you have to be a fool. I mean, you need to help banks. No? Why? Because have credit risk, but if you have a physical euro, the notes, you don't need to save and to bail out the physical euros. Then, and you don't need to bail out the digital euros, the CBDC. No? Then that's important because in addition to that, the problem that have the deposits is that even with those protection, the banks try to invest in risky investment because they earn money. And then we have all the Basel III that I participate in that because I was a member of the Financial Stability Board. It's an incredible and voluminous list of requirements. I mean, that was translated or transferred to the Dodd-Frank law in the United States and the Capital Directive in the Euro. And all those laws with the decrees and so on have 2 million words. 2 million words. The Bible have 700,000 words. Then one banker that want to be a serious person and fulfill with the Basel III need to read 2 Bibles. Then
quite a lot.
There is nothing similar in any other economic sector because it's a regulation that regulates the economic decisions. What is have a certain kind of Soviet, I mean, or communist, because of course regulation is very important. Regulation of antitrust, regulation protection, consumer protection, data protection, fraud, anti-money laundering. I mean, the list of in the Foods and Drugs Administration, what you put in the food and so on. I mean, regulation is extremely important to work well the markets, but not tell the producer, the entrepreneur, what he had to do. That is the prudential regulation. And with the CBDC, you don't need prudential regulation because that money has not been inverted. Then that's why the CBDC allows in the future, because few people talk about this, but in the future, it would be possible to liberalize. It would be possible to introduce competition. But now, no. Now I saw some speeches of bankers these days that the regulators should be more lenient with the Basel III, because if not, it's impossible to have competitiveness. And Martin Wolf yesterday wrote an article on FT advising, please don't listen to this silence, because if you introduce competition in this system, well, you could risk to have catastrophes in the money. And that's the way, my view on that I recognize that so far is not majoritarian.
No, but it's interesting. I mean, we all know that many central banks are working on CBDCs, actually most central banks in the world, but I think that your views are taking this topic like one step further. No, it's not just working on CBDCs, but more than that. And precisely because of that, I wanted to ask you, being you an advocate for CBDCs, same as myself, why do you think that some people and some banks as well, commercial banks, central banks, are scared or worried about CBDCs?
Well, because because they want to maintain bank deposits. I mean, especially commercial banks, and the central banks. I think that they thinking in the possibility not having deposits, bank deposits, they are terrified. I mean, and with a certain reason, because as far as you have deposits, you have to protect banks, you have to have privilege, you have to have prudential regulation. I mean, that is fully justified. I mean, there are people that say, no, we need to take out this privilege. No, you cannot if you don't have an alternative that is stable. Because if not, you have collapse of the flow of funds, of the flow of money. Then that's why I think they do not see what. In my view is that I am studying now why certain things that are obvious in the history during many years have not seen by people. And one is because my wife is a professor about and the sociology of women movements and so on, the votes of women. Then you have the votes, the votes with the in American Revolution, in France, in all the absolutism and so on. But until 20th century, you don't allow to vote women. Then there, and everybody, the most important minds accepted that money should not vote. But once they vote, nobody imagined to prohibit the vote of women. No, I mean, it's something that is obvious. Half of the population that you prohibit, but has been 2 centuries without allowing the vote. And I think that is the force of natural of what exists. Then the existence is, but I think that it's important not just to describe what exists. There is a sentence of Einstein that I like very much, that he said, Einstein, knowledge is very important, knowledge of what exists, but imagination is most important. Because, and I see sometimes the work of the good economists, the Smith and so on, was imaginate a world where you don't have tariffs, where you don't have, a world where the markets propose that. And then I think that they say, well, but banks are providing fantastic, fantastic products and services, and it's true. I mean, money and payments is important, and credit is very important, but you don't need to provide with protection and intervention of the state. You could provide without that. I mean, it's important. No? There is a sentence in the 90s of Bill Gates, probably, perhaps it's apocryphal, but I like very much, and I use with my students, that said Bill Gates is, we need banking. It is important, but we don't need banks anymore. We need what the banks do. I mean, the payments is crucial, but that should be provided by an oligopoly, and with the problem of stability and lack of competition. What I think, no, but it's not easy to see that. The reason why 100, and I'm conscious that the reason why the central bank, the 100 central bank are studying that is not this, what I am saying now. It's just a defensive position against the stablecoin or the yuan of China that they said that could compete, and so on and so on. I think this is viewed by, of course, not just by myself, but it's a still very minoritarian view. Then, and I think that I don't know. I think that in the future we will see that, but let's see what happens.
No, I think you pointed out like many interesting ideas. First of all, you said that what banks do is necessary, but you don't need banks to do that. And I think, that makes sense, or perhaps we are kind of seeing that because we are seeing many tech companies which do not come from a banking background. I don't know, Google, Apple, and whatever, starting to offer financial services. So this shows you that of course financial services are necessary, but perhaps how they are provided to us or by whom, that doesn't need to remain exactly as it is today. Then you also talked about
let me one thing.
Sure.
Probably we should never say that banks are not. What is bad? What is bad in the banks? Is deposits. Because if you take out deposits and you're allowed to do any other services, you have gain. Then the problem of banks is the deposits. That is not only banks. I mean, savings institution, Landesbanks, and so on. Then the problem is the fragility of deposits, fragility by design. Excuse me.
No, I get it. And actually, related to that, you mentioned before as well that even though most central banks are working on CBDCs, to some extent, this work has been defensive against stable coins, even the rest of cryptocurrencies, again, defensive against certain countries which.
I don't mind the reason, because what I want is to have CBDC. Then if CBDC, then that's why I am not against all this work. I think it's fantastic. and especially it's important that they design very well and is used and so on. No, but I mean, because that's why sometimes I say, well, let's wait, because what if we don't have CBDC, we cannot liberalize. Then please launch CBDC.
But the idea now would be, as we said before, no, for central banks to launch their CBDCs, which is good, but more as an alternative means of payment, let's call it, as something like a secondary compared to the money that we already have. No, I mean, CBDCs are meant to become one more part of the future of money, but perhaps limited one, no, because they are going to be limited, as you said before, by the very own central bank. So the thing is, so let's say that this liberalization that you propose becomes a reality in the future, then what would be the role of commercial banks? No? So if CBDCs become not just what they are meant to be, but what you suggest they should be, for all those reasons that you mentioned before, what role will central banks play in this future of finance?
Well, the problem is not the activities that are all beneficial. Let's see what the banks do now. They do payments, loans, and other activities that compete with others. I mean, providing investment funds, advisory, and so on and so on. Well, the problem is that you link payments to credit. But if you do all those activities separated, I mean, payments not linked to credit, you are provider of payments with CBDC. Credit, you take the money from the market, not from the deposits, and you provide credit. If you know how to provide credit better than others, sometimes it's not clear because artificial intelligence sometimes provide and select better credit. But let's admit that the banks know very well how to provide credits and the rest of activities. I mean, the importance is unbundling the money from credit, the money from risk, but you could provide all those then, and even it's curious because in the 19th century they have to prohibit that banks provide notes, no, and issue notes. Now you don't need to prohibit banks to do what they are doing. The only thing that you are going to do is to remove the protections and privileges. And if you want to decide to do a bank, but what happens? That is impossible to maintain a bank. The protection of the banks is not like the protection of agriculture, that is, you reduce profits. No, it's an existential protection. If you remove the protection and privileges, you don't need to prohibit banks. But nobody is going to be interested in put the money in a bank or provide credit, having the obligation without lender or last resort, without and so on. No, then and this kind is something artificial. And then the normal thing is to provide payments, not relating is what we see with credit, with risk, is providing credit like an intermediary. How is going to be provided the credit in the market? Is savers decide what to do to borrowers and between them. And in the middle, what appears in the market is intermediaries, because intermediaries is something that, what do you want, the merchant, and so on and so on. The problem is that there is a paper of Kumhoff in the Bank of England that says banks are not intermediaries. And it's true, because an intermediary asks you, where do you want to invest? Where do you want to lend and so on? And I organize and so on. No, the bank takes your money and I decide what to do. That is not an intermediary. It's something that have the power of the state to take your money and decide all the investment. As I said before, the investment, the problem is that they are providing only loan financing and with collateral. When what we need now is a market, savers that want to provide, for instance, equity. Many people that have a lot of money do not lend the money. They have a private equity and they provide equity. Why not to allow that to all the citizens? because all that amount of money that goes to credit and subsidize will go to other activities. No, then I don't know. I don't remember the question.
Oh no, we're talking about the future role of commercial banks in this world of CBDCs. No, if CBDCs are implemented the way that you suggested.
In my view, what we should do is to help banks to make this transformation, then allow them to separate activities and to decide you have a company, an institution that provide payments and compete with many other people. You don't need a current account in a bank, and you provide credit with other, and you provide with what do you want with other companies. And I help you because I think that they would need help. Because if you do what has happened, for instance, with digital photography started to appear and so on, and at the end, Kodak, that did traditional photography, went to bankruptcy. We cannot allow that with that enormous industry that is bank. I think that would need a transition program. But that transition program to do the new things in competition. Why I don't like the central banks that are putting limitations in the Euro Digital and others is that they try to protect banks to maintain them doing and offering deposits. Then that's no, I mean the transition should be to help bank. I always, from the beginning, because I know very well the banking industry, need help to do that. I mean, for instance, how to, now is a very interesting morning because many banks, especially in the States and others, have a lot of reserves. And then you could change deposits by CBDC because they have a lot of reserves in the central bank. And then that, well, very few people is thinking in that. I understand that we need time and see that the CBDC exists. At this moment, what is important is what is happening, that India, others, Europe and others launch CBDC. That is the most important objective at this time.
I agree. I think the most important thing now, which maybe was unthinkable of a few years ago, is to see banks, central banks, actually issuing their CBDCs. How they're going to set it up. That's something that can be like a device or design in the future, going with the flow. But at least they're going to be there.
No, and there are some obstacles that they are designing, like limitation, that I think are not so serious because that would disappear once. There are other limitations that I don't like. For instance, interest remuneration. Money should not have remuneration, not positive, not negative, because it's not risky. The remuneration is linked. If you take risk, you want remuneration.
Indeed.
But money should not have. And this idea of negative remuneration, of Rogoff and others, well, I find totally absurd. I mean, because one of the characteristics of money is that it's a store of value, and then the value do not change. Not more money, not less money. I mean, no. But there are others like limitation in the amount and so on that I do not see so dangerous. And if those limitations, well, is a way to sell the CBDC, welcome. I mean.
And you mentioned before this idea that you give your money to the banks, but then you do not decide what they do with that, and that brought to my mind the global financial crisis. And before asking you about that, I wanted to ask you about digital bank grants, because I know I spoke with other central bankers, and they are worried about the potential problems coming from digital bank grants if a CBDC becomes massive. So do you share this concern? Or?
No, that's true. Last week we had a paper, I don't know if you saw, of the Fed about all the literature about the problem and risk of disintermediation by introducing CBDC. But what is that? The problem is that if you study the problem of introducing CBDC, maintaining the deposits, they are right. I mean, because the problem, they say, it's a problem of instability of CBDC. No, it's a problem of stability of deposits. If you maintain deposits, all you do have impact, and you could create digital runs. Why? Because one of the things that I think we lack, and part of my book is devoted to this, is the following. We have seen every day many papers, many studies about the advantages and disadvantages of Bitcoin, advantages of disadvantages of CBDC. But I have not seen, with a certain modesty, like I do in my book, that you should start with advantages and disadvantages of the current digital money. True. This is the start. I mean, I always say to my life, we are users of Google Map. I don't know if you use Google Map, but to know the right way, you need how is your destination, but you need also to know what is your
where
location,
you are. Yes, yes.
Where you are. And we have not, I don't see any, beside my book, a little modesty, a devotion of water, the many problems, because I say that the problem is stability and competition, but they have many other problems, many problems. I mean, the seigniorage, you have to use the monetary financing, even if you say that you are not financing the governments, and many things that if you have CBDC, you don't have. No? Then that's why I think they are studying the problems of the transition. Okay, if you put CBDC in a transition and maintain deposit, you have problems. But no, the correct analysis is to see what is the best coin, the best currency. And after knowing that the best is CBDC than bank deposits, study the transitions. And one of the transitions is to maintain, but other transition could be help banks to convert deposits in CBDC and so on. Then, but it's normal. No? The problem, that is not the problem of CBDC, it's the problem of an assumption that you have said that you are going to introduce CBDC maintaining deposits. Okay. And one of the things absurd is the word of disintermediation, because you don't disintermediate. You have problems with the way the banks provide credit, that they are not intermediaries. I mean, the word disintermediation, in my view, is not correct, because the banks are not. You create problems in the deposits. And that's true. But the problem is in the CBDC, no, the problem is the kind of transition that you accept. At the beginning, 4 years ago, if you see, for instance, the letter of Mario Draghi to Spanish parliamentarian in 2018, and he said that one of the reasons why the ECB do not think that it's not good to launch a CBDC is that the central bank should not provide payment services. Well, 4 years ago, many people thought that the problem was that the central bank would provide, or CBDC provides. No, that is one alternative. But today, nobody think that if we have CBDC, the central bank is going to provide services. All the services will be provided. Then the assumption, if you think that the CBDC should be provided the services by central banks, of course, I am against of that kind of CBDC, but there are other possibilities. If you think that the only transition is to maintain deposits, you have problems, but why I am going to take that assumption?
True. Now, before wrapping this very interesting episode up, and since we're running out of time, I wanted to ask you, like in a couple of minutes, about your experience as governor of the Bank of Spain. Because, I mean, I guess you had the bad luck, let's say, of being governor during the global financial crisis, no? Which was, I mean, it affected the whole world, but especially in Spain, it was quite bad. And it was bad for the financial system as well, no? In many ways. I mean, we all read the bad news on the media every day. So you were there, no, governing the Bank of Spain. So What was your experience like in such bumpy times?
Yes, you said bad luck, and I thought at the beginning that was right, no, and especially because the calm and luxury life of a central bank governor disappeared in 2008, and I had to stay 12 hours working and so on and so on. But I think that doctor says that you know what is how an organ works when that organ does not work. I mean, and then you could understand better the absurd of our system because you have seen how the terrible consequences of a crisis, no? And that is, from the point of view intellectually, is a very good luck, having the possibility to see a crisis, because you have seen, no, that tremendous, no, because and you discover, because in each country, what did the Bank of Spain and in the States and the United Kingdom? In the United Kingdom, fall the second and third bank, and in Germany the Commerce Bank, in France I don't remember the name. The Americans have to introduce $700,000 billion to in all the big banks and so on. No, then my impression was they say that are bad bankers. Or fraud, incluso bad regulators, bad central bankers. But if it happens all over the world, what is bad is the system. Is the I mean, it is not possible all regulators, all bankers, and all them doing bad things. There is something in the system, and that was a very interesting perception. No, the idea that, because the rest is relatively simple, because it's what I am saying now. If you have the possibility of a crisis of money, you have to save banks. And then what we did was to save banks, inject 60,000 million euros, and the other, the Commerce Bank 35,000, and so on and so on, and then and try to do that, convincing the population that if you don't save the banks, it's a catastrophe. You could cut credit 1 month, 2 months, but if you cut the flow of money of one big bank in Spain, and we have shown that with millions of people during 5 days, you have a catastrophe, total catastrophe. And that's why that's a curious thing, because I say the banks are fragile, but during that crisis, only 1 or 2 banks, the Iceland and so on, and the Lehman, that was not a bank, a commercial bank, was an investment bank, went to bankruptcy. No government, no central bank is allowed to have a bankruptcy. Then they say, this is the guarantee of deposits. No, it's the guarantee of all the system, balancing of the banks. I mean, not just deposits, everything. No. Then the experience intellectually was very interesting. I had a quarrel with the minister, in my view, totally incompetent, because it created problems additional in the market and so on. And then we also saw the problems of with not having the CBDC, the digital euro, with the problem of fragmentation, the problem of the danger of leaving the euro in Greece, Italy, and in Spain. No?
Well, thank you very much, Miguel Ángel, for sharing all those very interesting and precious thoughts with me. As I said before, it's an honor to host you here today, and it's been an absolute honor to be able to speak with you for these over 40 minutes about central bank digital currencies, the digital euro, and your experience as governor of Bank of Spain during the financial crisis. I think we all got to learn a lot, and I think it's very interesting as well, because I got to hear the views from someone who worked in the central bank, but let me say perhaps the revolutionary views, no? Because your views about CBDCs are perhaps quite different from those from other people I've interviewed here before. And I think that's what makes this episode so interesting.
Well, thank you very much to you. It has been a pleasure, and having the opportunity to tell things. No, I am conscious that these things are not of today, but I hope they will be tomorrow. And then tomorrow, stability and competition, the economic effects, because now I see that the discussion on CBDC is centered in many important things: technologies, interoperability, privacy, cross-border, and many important things, because to have a good CBDC is good. But I think that also devote certain time to the economic effects, not just this kind of thing that are important, the economic effects, stability, competition. Once we have the CBDCs, I think that people would be interested in that, because now the view is sometimes a user view. No, we make a consultation. What do you think is good? Well, but that is not enough. I mean, it's important the citizens' view, no, because in general, no, a consumer view like bread that is have a low price. But if that low price is subsidized, the taxpayers have anything to do. I mean, then the user view is important, but it's not enough, no? And that's why I think all these things has been done, and I think it's a fantastic work, by the way, and necessary, no? Well, I expect that we will talk about the economy.
No, I agree. Even when I myself am teaching about this topic, because I teach courses on CBDCs, I find it much easier to find information or to find a message to convey when it comes to the user approach to the topic. You know, when you talk, for example, about privacy or about the technology behind CBDCs, rather than when we talk about what effect they're going to have on financial stability, on the monetary policy of a country. I think this part has been, of course, studied by central banks, but I think, well, many more things will come from that area in the future for sure.
Okay, thank you, Oriol.
Thank you very much, Miguel Ángel. It's been a pleasure. Thank you. And to all my listeners, please stay tuned for the next episodes. Thank you.
Bye.